Welcome back. My name is Sham, and I'm here to manage your money and grow your wealth. So today we're gonna talk about how to make a zero budget. How to use this zero budget? This is very new concept, and you are already having heard the zero budget. If you are new to this zero budgeting, then this video especially for you. So what is the zero budget and how the zero budget is effective? So in this video, I gonna talk about what are the processes, what are the steps required you to make a zero budget so that you can achieve your financial goals. Also, I'm going to talk about the examples. With the examples, how you can understand. It will help you to make the zero budget. So before starting the video, please subscribe the channel and like the video. Now let's get started. So how to make the zero budget? So this is the steps that first understand what is the zero budget. So zero budget is like the normal budget. So there is a difference between the normal budget and zero budget. So in the normal budget, we initially budget for the next month spending. So in this month, if we have got your income or payment, then we are planning the expenses where we need to spend. So we categorize this our budget into two category. First one is fixed expenses, where your grocery, where your the light bill, your EMI, your loan, or your important utilities and the bills that goes into the fixed uh, category, fixed expenses. Because of in the fixed expenses, you do not escape from the paying your EMI, because if you default this payment, then it will be due for you. You will get the late payment fees or the due. You need to fill the due amounts in the next billing cycles. So these are very important. You need to fill. You do not need to compromise in this fixed category of the expenses. Then there is the second category of expenses, which is the variable expenses or changing, which include the groceries, your entertainment, your your entertainment or miscellaneous expenses where you dining out or etc. So in these expenses, these are the vary because of every month you do not go to watch the movie, or every month you probably might not go to dining out, or you do not shop extra expenses, or you do not buy the fancy watches and clothes. So it varies. It depends upon your impulses, your buying impulses. When you decided to buy something, then this increase or decrease. So these are the variable expenses. So this normally in the normal budget, uh, the categorization or the budgeting happens as I earlier mentioned earlier. So in the zero budget, what happened in the zero budget? So zero budget is the your income minus your expenses equals to zero. So how the zero budget is? Your income minus expense equals to zero. So this is the zero budget will work. So here is your income, then here is your expenses, and after spending your expenses, your balance will be zero. So at the end of the month, your balance will be zero. So this is the zero budgeting. So uh, how then you will you will get to know that how the zero budgeting work. Is there any savings possible in the zero budgeting? Because I mentioned earlier that income minus expenses equals to zero. So how the saving is built? So the saving will build and it will let you to achieve your financial goal. If you uh, take an example with how the zero budgeting works. So before zero budgeting example, I will like to explain the what is the zero budgeting. So zero budgeting concept evolves when the in the normal budgeting, what the people will make a mistake is that they initially plan their budgets, and they probably make the savings, but that savings uh, savings tempted to buy the another things. So initially their savings is not being going to be spent in to paying the debts or to put in the saving accounts, but the saving money they were tempted to buy the another things. So they are not buying the assets, they are buying the liabilities. So that is the reason why this concept of the zero budgeting comes. So zero budgeting is the exact and minute detail of the budget. So there is a dollar to dollar mapping of the with your expenses. So each dollar you spend, it will be including your budget. So which and where you are spending. So that is very detailing out the budget. So you need to pay extra attentions and extra detailing if you planning to prepare for the zero budgeting. So in the zero budget, you probably need to focus on the exact expenses. There is no any surplus or the uh, overcomes or excessive that you are savings or your expending that is the exact amount that you, if you are planning to spend $1, then the $1 should spend. So there is nothing that $1 or the $0.25. So that is the exact correction of the budgeting that involves in the zero budgeting. So in the zero budgeting, there are the few steps. So what is the benefit of the zero budgeting? So zero budgeting allows you to reach your financial goals in exactly in defined time frame. So if you are planning to pay off your debt, so especially this zero budgeting works if you want to pay off your debts or to build your savings or to make the purchase of, you're planning to purchase any house or the car or the you're planning to buy the more expensive items in the future for that required for you. So for that purpose, for that goal, zero budgeting will work if you want to achieve in the exact time frame. So in the exact time frame, you should be able to prepare the zero budgeting. So in the zero budgeting, there is no space available for the there is no extra space or room to buy the unnecessary items or goods. So these are the 5 steps that I will talk about how you can just start the budgeting, your zero budgeting. The first one is write down your monthly income. So basic step is that write down your monthly income. So if you are the salaried person, then it will be very easy for you to write down your monthly expenses because you know what the salaries you are getting. But if you are the freelancer or you are doing any business, then this regular income, the income might not be regular. So in some months, the regular incomes will vary. So in some months you will get the high payments and some months you get the low payments. So make the average of the 3 payments, 3 months payments, and then make that is your income. Once you write down your income, the second step is write down your monthly expenses. So budgeting, it is very important before budgeting to know your expenses. So you need to write down, take a Excel or the pens, then write down your monthly expenses. Then third, set financial goals. So after writing your monthly expenses, then you can judge what the financial goals I need to set up in the certain period of time. So set your financial goals, and then fourth, give every dollar a job. So that is very important to achieve your financial goal. Then give the every dollar a job. So to allocate the exact amount to the spending. So no more than or no less than. So exact allocation of the uh, um, expenses to the fund to the expenses is very important. Then work on getting 1 month ahead. So this is also important. So you need to work getting 1 month ahead. So if you are planning for the this month, then you should be able to plan for the next month. So this month saving will probably will work for the next month. So you need to ahead on the budgeting 1 month ahead in your budget. So that is the steps that I explain about how you can make a zero budget. So now take an example. For this is the normal budget and this is the zero budget. So in the normal budget, if your income is 3,500, then on the rent you spend 1,200, on the utilities you spend 90, and insurance you spend 125. Student loan you spend 120, 150. So this is the monthly expenses I figure out. Then cell phone you spend $80. Then internet you spend 80. Food expenses, this is the 400. Entertainment, it is the 125. Transportation, if you you do any transportation or the public transport, then this is 150. Then your total spending is 2495. So this 2495 is your spending, and how you are able to achieve how much the amount you have achieved, probably 100. So $100 you have saved in the month. But in this case, what happens if you look really this $100 is spending, you can spend in the next month or this month as well, because the temptation to buy the variable expenses is not in your control. Because if there is a need that if you think that I need to go out for the dining, or I have the entertainment, or watch the movies, or make a party with friends, so this $100 that you have spent, it's not enough that you can achieve your financial goal. So this might get saved, might get spent, or you can probably buy the items from the Amazon. So this is not effective. It will not lead to effectively achieve your financial goal. So now take an example how the zero budget is effective, and we can understand that how much we are able to save in the zero budgeting. So in the zero budget, your income is same. So I keep the income same, 3,500. Your rent is 1,200. So same expenses, there is no any addition. So in utility you spend 90. In insurance you spend 130. So insurance Here was 125. In the normal budget, you keep the insurance 125, but I increased the insurance to 130 because of in the insurance you are able to if you pay the insurance more, then you will have the lower interest. So in the student loan, I taken up the I added the $100 to the student loan 250. So here in normal budget it was 150. So in this way you can save your interest rate. So if you pay the more EMI, then you can probably able to save the extra amount. So how you can save by saving the interest, I will tell you. In the transportation is same. Cell phone recharge. So cell phone I cut down the expenses. So here was 80 and normal rating, and in the zero budget I cut down it to 75. So in internet we required, so I keep internet as it is. So on the food is no change here. In normal budget also the food is 400. So in entertainment is 125. So entertainment I keep the same. So what the changes I have made here is I just those $100 I just increase in the student loan. So how much you are able to save in the coming 12 months, or probably by every month, is that sinking fund. Okay, so sinking fund is 125 and dev fund, snowball fund. So I just increase the EMI, dev fund EMI to 250. So I add the $100 in this 250. Here was 150. I add the $100, so it becomes 250. So now what the savings I am able to make? I am able to make the $500 every month. So you can imagine that in the normal budgeting, I was not able to achieve the $500, but this $100 is my savings. So it will be your savings that will save you through the interest. It will not be reflected in your account, but in the term of the interest rate, you are actually saving this 500. So if you save the 500, then your total spending will be 3,500. So cut to cut, you are getting the what is your income and what is your spending. So this is the zero, and you are saving this 500 because of the in the form of the interest you are savings. If you think in this direction, so you can achieve, you can pay off your debts in the timely manner. In the very soon you can pay off your debts. You can debt free, and if you are debt free, you can probably save this student loan whatever the $250 is going every month. So in the coming months it will be your savings. So $250 is your savings compared to 100. So in this way you can build more savings and achieve your financial goals. So I hope this video will help you, and thanks for watching.